Hi everybody, this is Chartsky with another quick weekly recap showing what we did in the live trading room April 17th, 18th, 19th, 20th, and 21st. We start with Monday, April 17th, and you'll see that there are no trades showing up on the charts. Well, that's because there was no live trading room. I had a couple of sick grandchildren, and like we always do on the rare occasions when I have to cancel the live trading room, I try and make it up with either an add-on day or an afternoon session, and thankfully this week we got the add-on day on Tuesday. We woke up Tuesday morning to find that the British Prime Minister Theresa May had made a surprise announcement seeking special snap elections on June the 8th. Her party was leading in the polls. I guess she thought she could add to her majority, and so when one of the major world powers makes a surprise announcement like that, it's going to rock the financial markets. And what it did on Tuesday was it sent the British pound through the roof, soaring to 4-month highs. And you see that there. Naturally, that's about the time that she made the announcement, and there it went up over $1.27 and hitting 4-month highs. And now at the same time, their FTSE kind of crashed. That's a little bit better chart there to show you. FTSE straight down when she made the announcement, and the British pound straight up. Well, what does that have to do with us in the markets we trade? First of all, we expected a very tough morning on Tuesday because of the news, fundamental news affecting the currency markets directly and the stock indexes indirectly. Let's just look at the currency, the EuroFX. It had gone up pretty good since the announcement was made, but it had gone into a trading range up here. So we tried to buy near the low of the range, and price didn't really do anything, and we scratched that trade. Then when it went up some, we bought again, but you can see it just didn't go very far, so we took a part winner out in the euro. 8 ticks is better than 0 ticks. In the E-Mini S&P. What happens sometimes with one index can bleed over into the others, and we traded these key SR levels that we've talked about and even taken trades on. I believe it was a week before last, when price got down through 23.39 and then 23.38. We took a sell, gave up a tick to get in, and it whipped right back through. That was the 1 tick that we had to eat to get out. And losing 1 tick again is better than losing a lot more. In the gold market, I gave one away, actually. Gave away a 15 tick trade. Got a great feel right here on this trade, but price kind of spiked up into us and then whipped pretty bad there. So I just closed it out for 1 tick, discretion being the better part of valor and all that, I guess. And so I gave one away. And then we had the big price spike down into this stealth zone here, and you can see the stealth zone. Price spiked down into that stealth zone. We'll talk about that more here in just a minute. But we tried an add-on trade in gold, and when the add-on trade didn't work, we closed it out for 1 tick, and eventually tried an add-on trade the other way. And again, you can see a range here. So what are you seeing this kind of common on this chart? You're seeing whip and a spike out of the whip, and then more whip, and then a spike the other way. Anyway, we closed this trade out. Only got filled on the front end part of the add-on. We closed that out for 10 ticks. Again, 10 ticks better than 0 ticks. And then in crude oil, we got an early trade in the May contract. Then I noticed that the volume was higher in the June contract, and so we rolled over and traded that. And that was a pretty easy buy through the stealth zone for 15 ticks in crude oil. Then when it retraced, we tried another buy. It didn't get very far, and it knocked us out at a break-even trail. But the add-on day came from adding up these small trades. It's not sexy, but you add them up, and you get an add-on day out of it. The one small losing trade, again, more than made up for these, or by these little trades in gold. So Tuesday was an add-on morning. Wednesday was the daily profit target plus, and this is pretty simple and easy. Price come down in crude oil. We took a sell on a retracement and got 10 ticks. You notice the market's not moving very much, and notice that our targets are only 10 ticks. And 10 ticks here, and it was 8 ticks, part winners. That was all that we were looking for, and I think I'll post a video showing these trades in a little bit more detail. But I'm a firm believer in taking what the market's given. In gold, we had a stealth zone and price poked out, and we took 10 ticks off that. And then in the EuroFX, we were going to trade this intermediate support and resistance level. We took a buy when it came down into us the first time, and that trade didn't work out. It was showing weakness, so we immediately scratched, and we turned around and sold and got a part winner there. You add all three of those together, and it's the daily profit target plus. But now let me talk a little bit further here for a minute about a couple of these things. You see a stealth zone down here in gold, and price is kind of spiking down, and then you see an intermediate support and resistance level here at 52.90 in crude oil. These are levels that are marked. I do these stealth zones almost every single day, and these are levels that are good even after the live trading room is finished for the morning. If you want to practice, or if you're experienced and you want to keep trading, look at what happened with this level. Price whipped around up here, came down into it, and was rejected. And look at the stealth SR zone down here in gold. Price came right down to it and couldn't get through, penetrated, and it was rejected. What I want you to especially notice is that in gold, when something like this happens, that's an indication that price is going to go back up. So anyway, those are on the charts, and they're there, and they're good. Looking over here at the S&P, you can see an SR level that price got to, and you got stopped cold up there too. That was Wednesday. Now Thursday, we had very difficult conditions, but we again got the daily profit target plus. Here, let's look at gold first. Down here, there was major dumping of billions, and that's with a B, in gold futures, and price came down really hard. We tried to sell once, twice, 3 times, 4 times, and we couldn't get anything, so we turned around and bought, and we got 15 ticks on a nice trade in gold. In crude oil, we tried an add-on trade, and we got partial. We got it a fill on the front end. You had 2 levels here of intermediate support and resistance, and we were kind of trying to use those. And this is like the euro trade from the day before. The first thing we tried to do was buy it, and then when that didn't work, we turned around and sold and used an add-on trade. And then we got 3 break-evens out of the euro. But if you add a great trade in gold to a nice part trade in crude oil, we got a daily profit target plus day on Thursday. And that brings us to today, Friday, which was probably the most difficult day of the week. And you can see starting with the upper left, crude oil, all kinds of SR levels. Market's just kind of been trading close to the same range, and it's got an awful lot of support and resistance in here, and you can see price responded. We had a really good entry up here, but there was no fill on it. The computers kind of got us on that one, and then the rest of these trades in crude oil were break-evens until the last one. We'll talk about that in a minute. We tried to buy gold here, and we couldn't get anything. We tried to buy it again over here, and we couldn't get anything, and then we had another big old spike down in gold. $400 spike, as a matter of fact. And we tried to sell that right here at this 82.5 SR level. And when that didn't do what we wanted to see, we got out and scratched the trade, and you see it came on back up. Now crude oil has lost over 6% this week, so it may not have too much farther to go, but could always break down. And that's why we took this 10 ticks on a sell of this SR level. 10 ticks is better than 0 ticks. This is our biggest loss of the week. We had a nice 16 tick trade, and I was real tempted to just stop, but I was looking for one more trade to add on to it to try and get everybody an add-on day today on Friday. Price came down, broke through that level pretty strong, and then put in a V reversal, and we closed it out for an 8 tick loss. This would have been, and this isn't a good time to talk about it, I guess. We do put a 20 tick hard stop in on every trade, but that's not there to be hit, and this is a good example of that. When I saw that price was not going to do what I expected it to do, the reason that I took the trade, I try to get out with as small a loss as possible. We tried to get out with a couple ticks, I think, then 4 ticks, and then we couldn't get out of that, and 6 ticks, we couldn't get out, and we finally got out with 8 ticks, but this thing came all the way back up and would have hit the 20 tick stop. So the stop's not there to be hit, but it's there to help us manage the trade. And we hadn't talked much about the E-Mini S&P. There hadn't been very many E-Mini S&P trades this week, but this level right here is what I draw on the charts from time to time called the line in the sand. And I want you to notice what happened right here. What a major fight that was, and what major support and resistance this line in the sand offers. We also had an intermediate level down here. And we have what I call a minefield just above it. So I didn't want to take any trades in there, and especially because, as we discussed in the live trading room, this was pretty suspicious in my mind. Very low volume, most likely the high frequency computers just whipping price back and forth, and had price gotten above this minefield up here, it could have gone up to this next level and really dinged us for a loss. So we weren't really interested in the S&P for the live trading room, although these levels are very tradable by themselves. And now looking a little further, I wanted you to see that in crude oil, these are again levels that are available to all the members of the live trading room. You can see what happened when price did break down. It held at that SR level, and then it held at the next SR level. And then we have, let's see, I believe it was gold. Yeah, gold broke up, and here's a target level. It was there marked before we started trading, and you can see gold got right to it. And then the S&P got down to the next SR level, and it's retracing just a little bit. But these are levels that are there that are on the chart that you can use, and in one-on-one I teach you how to use. They're available to you every day, and I think they're worth the price of admission all by themselves. So again, no trading on Monday, add-on day on Tuesday, daily profit target plus on Wednesday, daily profit target plus on Thursday, and the daily profit target plus on Friday. Now I want to caution you that not all weeks are like this. Sometimes they're more difficult, and sometimes they're better, but that's all part of trading. Here is the CFTC disclaimer. It's very important, and I urge you to read it. And if you're interested in joining us, or if you just want to see a little more, or maybe get some more information about what we do every day in the live trading room, please visit my blog at www.chartsky.com. And if you've got any questions about this video, about any of the days, any of the trades that we took, or maybe questions about anything we do every day in the live trading room, please send me an email to chartskytrades@gmail.com. And remember, if you didn't get these results this week, or maybe if you just want another set of eyes to add to what you're already doing, you could be trading with us tomorrow. Thanks for watching.